A trading plan gives you structure, but real results come from the strategies inside it. The strategy blueprint is for recording each detail of your strategy and is the bridge between your strategy backtesting and your trading plan. Loading into the sheet, we once again see that row 3 is where we place a lot of our settings before moving on and filling out the rest of the sheet. So this is going to be based on a strategy I came up with almost 5 years ago, which is known as the 35 bounce strategy. You'll understand why shortly. Moving on, we have status. Now this corresponds to at what point of the strategy development we are. So if we click this down arrow, we see concept, testing, optimizing, or finalized. With this strategy, I was testing all sorts of different things and really refining a few of the specific details, so I would consider this under optimizing. Timeframes, you can put in as many as you would like here, but I know that I tested this one for the 4-hour time frame. Risk, ratio, and win rate are items we should fill out later once we've finalized the strategy and chosen a ratio and risk to trade with, which will then give us our projected win rate. Now, it's a good idea to start every concept with this sheet so you can mark down a few of the initial ideas before refining them further as you begin to backtest. Jumping down to the first section, we have chart and indicator settings. List out all of the indicators and settings required for your strategy. Now with this one, I know that the 35 bounce is based on the 35 EMA. I was initially testing the 20 EMA and the 50 EMA, and there was something magical about the area right in the middle. So I chose the EMA in the middle, 35 EMA. I also used an RSI indicator, but I wanted to deviate from the default settings, so I set this to be a 12-period RSI, and also with the ATR, which also defaults at 14. Those are all of the indicators I was using in this strategy, so now we're good to move down to trade setup. List out the setup process that helps you identify a potential trade forming. To give you a basic idea of this strategy concept, I noticed that in a trending market, often the pullbacks would bounce off the 35 EMA. I wanted to understand why and figure out how to capitalize on it. So in order to identify a trade setup forming as it approached the 35 EMA, I would have to set some conditions. So these were: market has provided at least one candle whose wick doesn't touch the 35 EMA. This was to ensure the market wasn't just sitting on the EMA, but instead had some movement towards or away from it. Next point, candle body or wick crosses the 35 EMA, then closes back on trend side, known as the bounce. This is the interaction point. At some point during this candle's formation, it must cross the 35 EMA, then return back on the side it came from. We'll further define that here. Candlestick pattern must be 2 counter trend candles followed by a trend candle. So this ensures there are 2 candles moving towards the 35 EMA before the one that is our trend colored candle bounces away from it and we enter the market. In a previous video about trend, I outlined some pretty definitive rules to identify trend. Now I've not included those in here, and so I'm using the 35 bounce as the indicator of trend. For that reason, the color and direction of candles identified as counter trend will depend on which side of the 35 EMA price is currently on. Also, EMA cross must occur in the second or third candle of the pattern. This ensures that the first candle is this one here, which does not touch the 35 EMA. That is a good basis and is still broad enough to capture a lot of opportunities to identify a trade setup. Now we move on to entry steps. List out your steps that confirm a valid trade entry and trigger your signal to enter the trade. This is where things are going to get a lot more specific. First of all, I'd like to identify where I'm actually going to enter the trade. So for here, I'm going to say entry is at the close of the bounce candle, the third candle. Next, we need to define the stop loss, as we never trade without one, and it's what we base the ratio on. So let's say stop loss is the largest swing of candle 2 or 3 plus 1 ATR value. So for an uptrend, that'll be swing low, and a downtrend, that'll be swing high. Next, we'll define a starting target. So let's say target at least 1-to-1 to update after backtesting. Okay, that's a good starting point for entry steps. Now I realize for a blueprint, this is still very broad, which is intentional. We would then go and backtest this, which would help us identify what is working well and what is not working well. We would use that data to build out factors for optimization, which we would then redefine our trade setup and our entry steps to ensure we are targeting only the setups most valuable to us. If I were to come up with some factors for optimization now, I might start with looking at the stop loss. Let's say we'd take candle 2 or 3 swing like we did and add just half the ATR instead of one whole one, or we could say 2 times swing only. Plenty of options there. Perhaps the RSI as well. We could say the value must be trend side. So what I mean by that is if we are going long, the RSI value must be 50 plus, so above 50. If we are going short, the RSI value must be below 50. Let's say candlestick pattern. The third candle must be larger than the second, or else candle 2 to 3 must have specific RSI value difference. What about entry candlestick as well? If that was too large, that could be a problem. So let's say we could limit the size. We'll say it can't go beyond either the wick or the body of the first candle. So that would keep it within a specified area. All of those are things we could immediately start integrating and testing. That brings us to a good work in progress of this strategy blueprint. As I was saying before, we would then go and backtest this, start building in our factors for optimization, and as we redefined these and implemented each one of these, we would remove them from our factors until we have a fully defined strategy. We would then go in and define our risk and our ratio based on our backtesting results. So for here, I'll put a few dummy ones in, and we'll say we had a win rate of 72.4%. With that clear, we can turn this into a finalized status, which means we could come back to this years from now, knowing this is a strategy ready to trade. This shows how to use the strategy blueprint to build a clear one-page breakdown of exactly how to trade this strategy. It's simple to follow, yet detailed enough for anyone to understand and apply. With this final piece of the puzzle complete, we are now ready to start developing strategies. Comment below if you already have a concept in mind.